Hi, let's talk about Gerdau company that provides steel products and services. The market cap is quite a big, and that is one of the stocks more likely to be more quality than I used to research because the snowflake, as you can see, is mostly yellow one. Yeah, Volvo should not consider investment advice. The trading is happening 1% below the site's estimated fair valuation. Earnings grew by hugely this year. There was an announcement that it will be steel product ending by the 2030 and 2040 years, and I think currently those companies would make pretty high returns. And yeah, of course, there's risks that earnings are forecasted to decline an average of 21% per year for the next 3 years. The company has high level of debt, and as we can see, last share price went pretty high. So they had some trading halt, earnings updates, so debt financing, operating results updates, and that caused market performance of 1 year return 201% in the long-term price volatility considered same as the industry, so pretty higher than the average market volatility, but still not the highest. 1 year return 200% beats the industry, beats the market. 5 year return 300%. And yeah, valuation side, fair value should be 7 cents higher than it's currently. And valuation side, yeah, TipRanks has not any price targets, but MarketWatch has. So there's yeah, it's on after hours, 5 cents off, and yeah, stock price target an average of 7.24. In good scenarios, it could bounce even over $8 per share. And future growth, as I said, it forecasted to decrease by 23%. But anyway, it's looking not so bad. As we can see, the dynamic, the forecasted dynamic here, and earnings per share growth, as we can, yeah, so they might be reaching the peak numbers in end of this year, and then it's forecasted to decline. I don't know if there's some of the expansion expenses, or do they invest in some of the research, or what is the root cause of this forecast that it would decrease. And past performance, so historical annual earning growth increased 72% hugely. They had 5 years ago, yeah, there was a EPS on the negative side, 2 years, but currently the situation is looking better. They do have high quality earnings and financial health side, so do they have actually not that bad as I thought. Debt to equity ratio is 51%, considers high, but as usually those kind of companies, I think they have pretty high the balance sheet. So yeah, there's a huge amount of assets there. They do have cash. So I'm not quite sure what does that are. Looking there, 7 billion. Is that dollars, or is that some other currency that are we looking for? But anyway, but if we check this, it's actually, yeah. So if we look at this information, I think it will be here more details. It's operates through 4 segments: Brazil business, North America business, South America special steel business. The company offers semi-finished products including billets, blobs, and slabs, common long rolled products such as rebars, wire rods, merchant bars, light shapes, and profiles to the construction and manufacturers industries, finished industrial products including commercial rolls, steels, bars and light profiles and wires. Agriculture products that include stakes, that smooth wire products and draw products, compresses, bar bed and barbless fence wires. So there's actually all of a bunch of products that they make it in other markets. So in addition, the company offers flat products including hot roller coils and heavy plates, and resales flat steel products as well as mines and products iron ore. It sells its products through independent distributors, direct sales from the mills, and its retail network. So they do have a retail network that they're selling their products. The company was founded back in 1901 and is based in Sao Paulo, Brazil. Yeah, it's the subsidiary of, so there's a Metallurgica Gerdau SA. So there's a bunch of products. So that is actually a good thing for that. The company is diversified by the products that they have. So I think that's is this a kind of Brazil dollar or something? But they do have a cash, and which is not covering the level of depth. But anyway, they do have a lot of assets here, physical assets, inventory, cash and short term, and receivables. Yeah, dividends. So current dividend yield is 1.24, but I'm not sure if they cut that because they had ups and downs. So lately, last full year, where back in 2019, they increased the dividend growth of 100%, based on 5 years 23% per year, based on 20 years 8% per year payment show. So actually it's here the forecast that next dividend is in June. So they had last month 0.027 per share. And let's have a look at the stability and growth payments. So they decreased a few times, actually 2 times in this time frame, 2016 and 2020. And they actually there is a forecasted. So currently, it's forecasted to increase back again, and then somehow it's forecasted to decrease. I don't know where this forecast come from. Yeah, but as we see here, dividend payments have been volatile in the past 10 years. Anyway, current payout to shareholders is 30%, which is not so bad, and future payout to the shareholders is pretty much the same, 29 in the year of 2024. Let's have a look on the ownership. No volumes here on the insiders, and ownership breakdown: institutions holding 67%, public companies 32, insiders 0.03. Wow, JP Morgan added 21,000%. Last reporting holiday 31st of March. They were actually, do we have Yeah, Vanguard is here. Yeah, BlackRock as well, but it decreased 97%. I think they're getting out of this one. And Simple Safe Dividend shows that earnings per share is growing pretty high and pretty impressively. Shares outstanding at the same level as usual, and total sales increased based on few years back. And yeah, in Finviz, which we see here that it's trading pretty stably up, and there's a I think this line is what we should focus on. So current price could drop even to this number, so 5 or 514, and it so there's a two lines, so there's actually corridor, so it would be pretty volatile in these two sections, and yeah, it might go up to the 750, or it could go drop to the 5 or something. I would prefer, like, if I would invest, I would have to wait some of the, for example, $5 per share, which would be pretty good, or even 4. So we have this flat line here. 4.25 would be pretty good entry point. And yeah, as we can see, the max, so we have here, yeah, 1999, pretty huge growth they had till 2008, 6,000%, huge return in 8 years, but they bounced from there, yeah, minus 80%. Anyway, this is pretty volatile share from the March or April, yeah, 265%. And investing.com summoning the stock for long-term investors as a strong buy by moving average buy. Thanks for watching this video, subscribe to the channel, like the video, and see you in the future one.